In today's video, we are going to be going over how you can set up the strategy in the background here for yourself, and even a code for 1 month free of the Krown Quant automation service, which allows you to do exactly this, and then also automate that so that you don't even have to touch it if you don't want to. Anyways, without further ado, we can just jump right into this one, starting off with the actual setup itself. So I want to bring you on to the chart view right here, and this setup is a very simplistic setup. Do not confuse simplicity with, something that's bad. At least in my experience, it can be quite great. And it is literally just going to be based off of the BBWP indicator, a freely available public indicator in the TradingView library. So if you literally can just put this on your TradingView account, you will be able to play out this strategy, whether you even go for the free month of this service or not. So without further ado, first, I will give you the code for this, and then we will go over the actual strategy in itself. And I think you're going to be very happy with, hopefully, the simplicity of this one. And you can even optimize it further than what we have right here. Anyways, first things first, the code is Midsummer 100. It's our European holiday, which means absolutely nothing to the Americans out there. So it's happy 4th of July to the Americans and happy Midsummer to all of the Europeans of the world. And if you're not from either of these places, I don't know what to tell you. You have to play full price. No, all good. But this is going to actually get you 100% off of your first month of this service, which comes with, all of these tools and then many templates actually at this point. And then also we'll be having 20% off of all of the other products and services in the Teachable School, which you can find a link to in the description below. Anyways, for this, we're going to go over here to the trade strategy and checklist, and we're just going to go down we're going to go down the list as to how to play out this strategy. So first things first, what time frame are we going to be using? The 1 hour time frame, and you could actually apply this to some other time frames as well. It does seem to operate decently, for example, in the 30-minute time frame, although I imagine some further optimizations can certainly be made and would make it more viable, more better, if you want to call it that. And then we are only going to be trading on the long side of the market, so not using this for short, although perhaps there is a setup there, but for this particular study, long only, baby. And from there, we will only be using, like I said, the BBWP with these specific settings: 100 look back and 13 length. So I'm going to go into my chart right here. I'll bring up my BBWP, and you can see that the inputs, again, just for reference, length 13, look back 100. Make sure that is properly set. Otherwise, this will not play out as intended. And by the way, if you're going to have further optimizations on this, you'd be best suited to play off of that BBWP length, actually. Not necessarily the look back, but the length. Anyways, moving on from there, what defines a risk management parameter? We're going to be using the Lux Algo supported resistance indicator for this. Again, freely available on TradingView. Just type in support. Usually pops up with that. Supported resistance, levels with breaks by the Lux Algo. So I'm going to throw it up on my chart, although I will take it off later just because it kind of makes things a little bit too convoluted. But for example, let me just explain what's going on here. Let's go over this example right here. So you see this enter long. So it actually took a very terrible trade here on Monday, May 27th. And it's going to be using this blue line prior to that entry as the risk management area, meaning that if Bitcoin, in this case, comes back down and closes below that line, then we will take the loss. And that's exactly what happens here. The basic SL orange marker in the background signifies that a loss has been taken on that particular trade. All right, moving on from there, let's go into how positions be entered. Again, very, very simple. How positions be entered, we need to see the BBWP slope be positive, and then also BBWP must be above 50 percentile. So on the BBWP indicator right here, all I've done is I've marked off with my green horizontal bar this 50 percentile level. And for the slope of it, well, in this case, you actually have to reference it yourself, unless you're using these tools, which in that case, they'll be done automatically for you. But basically, positive slope means that the current BBWP read must be greater than or equal to actually the prior BBWP read. So let's say that we were analyzing this particular closure right here, and we want to know if these two conditions are satisfied right there. Well, one, we're obviously very much above 50 percentile. Okay, so that's satisfied. And then two, is it a positive slope? Well, yes, you can look at it and tell this positive slope, but the way they confirm is that if the prior closure was less than the current, then that condition is true. So in this case, the prior one, you can reference the top left-hand side actually for these numbers, which actually I just realized you cannot see. That's super weird. Oh, because it's stuck. It's stuck right here. Okay, I see. Well, on your chart, you'll be able to reference the top left-hand corner, exactly where my cursor is right now. But for whatever reason, it doesn't show up on this, which is kind of weird. And that will tell you what the read is. And then, of course, if that number is less than the current one, also satisfied as far as the condition goes. And that signifies our entry. Okay. Now, how positions be exited, assuming that risk management is not hit. We need to see two of these happen simultaneously. Ignore that whatever happens first, because in this case, that is not true. We need to see BBWP below 50 percentile while the open is less than the close of the current candle. Okay, so if those two things are true simultaneously, we exit the position, whether it be a gain or a loss. So in this case, let's go with an example. Well, in this case, obviously 50 percentile is anything below this read right here. And then we need to see that let me just double check. The open is less than the close. The open is less than the close. These two things need to be again, simultaneously true. So open less than the close, well, you can just reference your candlesticks here. And again, top left-hand side, you can actually see, you actually can't see it. Okay, that's very bizarre. I guess it's a little bit cut off on my screen here, but basically, if the open is, again, less than the close, and that is true. So I'm highlighting this one right here. The open is 67,550. The close is 67,740. Well, is the open less than the close? It is. It is less than the close, meaning that that would, could have been what's it called, an exit here. Obviously, BBWP being below 50 percentile line is the other condition is true as well. And in fact, that actually happens right here. So you can see those both happening simultaneously. In fact, just an easy way to tell this one is that, look, if the candle is green, or in my case, cyan, indicating a positive gain, then that condition is true alongside BBWP. Okay, going on from there. We have a few more considerations. These are, again, areas where you can maybe further optimize things. We want to omit trades on Thursday. Why is that? Because generally speaking, most strategies that are long only will suffer on Thursday, especially if it's a lower term time frame. Why has that been? Because historically for Thursday has been kind of a negative day for Bitcoin typically. And then we're also going to be using a trend filter for the 78-minute time frame. I know that sounds like a very bizarre time frame, and it kind of is, I guess, because, well, I mean, it is a bizarre time frame, obviously, but what that means is that the trend represented by the 21 and 55 exponential moving average, which I have on the chart as these two moving averages right here, needs to be to the upside on the 78-minute time frame simultaneously, while the other opening conditions are present. For the closing conditions, obviously it doesn't matter where that EMA cross is, but yes, so just so you know. So the 78-minute time frame is right here, and well, you just have to reference this to make sure that it's it's in alignment with the other criteria. All right, cool. So now that we've got that, I'm actually curious what the stats would be like on a 78-minute time frame. Yeah, not as good. So definitely stick to the hourly if you're going to do this, and go back to the deep backtester, because we want to be looking at the tested history from 2014 to 2024. So 10 years of history here. We can see that on a trade-by-trade basis, it does have just over a 51% strike rate, meaning that 51% of the time, or just over 51% of the time, we can expect that this will close profitably for us. But where you obviously stack up the wins is a profit factor at 130 here. If we go into the performance summary, we can see that the average winning trade is 172. The average losing trade is 137. So obviously, if you have basically a coin flip in terms of probability to win or lose, if you have a greater average return for the winning side, that's going to be a winning setup long term. And then actually we should just reference down here as well. I'll remove my face for this, but the average amount of time in these trades for the winning side was about 15 bars. So that would be 15 hours versus the losing side which is 11 hours. So the more that time goes on here, the more and more likely it is to be a winner. Anyways, just, consider that as well. Like if you are trading this manually by hand, then you're probably waiting for a while. You're probably waiting for a while. So yeah, that is of course one of the advantages of using the tools like we outlaid over here with the Krown Quant automation, which, like I said, with the code Midsummer 100, damn it, where is it? Show it. I should probably show it right here. Then you can get your first month free, and you can decide if you like it or not. If you don't like it, just cancel it, and no sweat off your back, no sweat off our back. And if you like it, stay on. And again, you can use this tool to automate other things. And this is also going to be used, not also going to be used, but it is also a good insight into the crypto school that we're going to be starting on Thursday. 4 days, 4 hours, 50 minutes, and 46 seconds, and counting from the time that I'm recording this video. And basically, if you're in that program, or if you want to learn sort of the ideology behind what we're doing right here, you'll learn that in that program, course, whatever the hell you want to call it. We are not sure how many cohorts we're going to do, because this is the first one. I'm not really a part of Crypto Banter or anything like that, so we want to see how it goes. If it goes well, maybe we do more, maybe we don't. But this school here is actually free to join. It's free to join with an exchange account, but that's your exchange account, your money, that's yours. So if you're anyway interested in it, then check it out right there. And I think that's probably a good place for me to be leaving off on this video. So that's it for today. Again, you can get the Krown Quant automation for free for the first month with the code Midsummer100 in all capitals. You can also get 20% off of any one of the other products or services with that same code. And we'll be running this for a week. So yeah, if you're interested, check it out. If you're not, don't. And from there, I'll see you in the next one. Take care, much love, and see you on Monday.